let me just bring in David Pierce, the Director of Strategic Initiatives from GPS Capital Markets. David, wonderful to have you with me. Yields seem to be in the driving seat here.
Yeah.
Tell me where you think yields are headed at this point, and is there a direction of travel? Should we start to see some stabilization come through?
It depends on where we're talking about in the world. In the U.S., as you said just a few minutes ago, it looks like we are still pressure to increase interest rates in the United States. I think that here in Europe, we're probably at a standstill right now. I think that we're going to hold for a while, and I don't see that changing a lot. But that means that we've got that diversion in the yield curve between the U.S. and Europe and maybe even Asia as well.
Yeah, and so it seems to me that the greenback has been reacting to this move higher in yields. As yields have been trending higher, especially over the last couple of months, we see the strength of the U.S. dollar continue. Yeah. It is quite a strident move. To your mind, have people been positioned for a stronger U.S. dollar? Have they caught this move?
From our clients, yes. That's what we're seeing is people are expecting a stronger dollar. We're calling for a stronger dollar. So pretty much across the board. And, that is causing a lot of different ripples in the marketplace because it, in addition to the interest rates, you've got changing dynamics in how the currencies work with one another. And that's making some economies work better than others, frankly.
Well, when you talk about some economies not working that well, let's talk a little bit about Europe.
Yeah.
The sentiment is pretty negative at the moment. The activity indicator is very subdued. In fact, this morning we had PMI numbers again come in pretty low, which tells you that there is an ongoing downturn in Europe. And you square that up against what's happening in the US. Yesterday we had upward surprise on JOLTS. We had an upward surprise on ISM manufacturing. And so the relative prospects are quite pronounced here. Does that explain the full extent of the move in the euro?
I think it's part of that. And you have the increase in interest rates. You've got the economy doing really strongly in the United States. And again, you've got some struggles going on here in Europe. But one of the things that I'm seeing in Europe, and I'm from the States, I'm over here, been here for about 2 weeks. I'm seeing a lot of people traveling and a lot of people coming to Europe because it's a bargain right now. And seeing a lot of people from China, a lot of people from the States. So there is that type of influx coming in, but at the same time, the general job market and the underlying infrastructure that we're seeing here in Europe is really struggling. They're having a hard time. And as you see a stronger dollar, hopefully that's going to turn around because European products are less expensive for the U.S. and they'll be able to start purchasing more. And as you see, job market is really strong in the U.S.
Yeah. Well, do you have a view on where the euro could get to? We're sitting at 105 now. It wasn't that long ago we were talking about parity. I mean, we have the chart up here. We're basically back to where we were at the beginning of the year. We bounced up. And now we're back to those levels again. And remember, at the beginning of the year, we were talking about parity.
Yeah, and I think we're talking that again.
Yeah.
I think we're going to come close to parity again. And we've got some resistance levels down in the high 103s, 103.80 is where we're seeing resistance right now. But we've been down close to 104. And I think that we're going to go through that. I really think we're going to definitely test parity in the marketplace.
And to determine whether or not we get there, should we just be looking at the differential in yields going forwards? Is that going to be the biggest driver, do you think?
That is going to be one of the big drivers because, as you know, if U.S. raises interest rates again, money kind of chases yield in return. And so you would see a lot of money coming out of Europe and Asia and other countries and going into the U.S. marketplace. So that is one of the drivers. But you've got to look at the underlying economics as well.
Yeah.
If the European market is doing well and buying lots of product from overseas, that is one thing, but if they're not, that changes the whole economic situation. And so it's more than just one thing, but I agree with you. It's the economics and the divergence in interest rates is going to be one of the main drivers.
David, there is rampant speculation about the yen and whether the Bank of Japan are going to intervene. Yesterday, there was a weird move in the afternoon session. Everyone's saying, ooh, they've intervened, but that didn't happen.
People were speculating, but
people are speculating. But I mean, surely we must be at levels now where the Bank of Japan want to intervene and should be intervening.
Yeah, but I'm not sure they have the capital and the wherewithal to do that right now. Their economy is struggling, and you know, I was talking to my wife's cousin, he lives over there, and he was telling me that everybody is struggling over there in Japan, and he doesn't think that they have the appetite for really a strong intervention, maybe a slight intervention, but not a real strong one. And so that's a market that we've also seen a tremendous uptick in investment in properties and real estate in Japan from outside of the country, from the US, Singapore, places like that we typically don't see. I mean, like a 45% increase, you know, in the last few months.
So if you don't think they intervene, where does dollar yen get to then?
I don't even want to think about that. No, I think that, you know, we're basically at 150 right now. I think we could go to 155, 160 by the end of the year if nothing happens on the Japanese side, because, you know, they've got to intervene and do something. Otherwise, there's just going to there's no end in sight for it right now.
Yeah. Well, I look at that and I hear what you're saying, and that for me just says one thing. It seems as though dollar strength is just going to continue. So
that's all I can see over the next through the end of the year. Yeah.
Yeah. Okay, great. David, wonderful to have you with us on the show.
Shimona.
So much going on. Very nice to get your perspective on FX. David Pierce, Director of Strategic Initiatives at GPS Capital Markets.